all the amendments in the audit report. So I'm
इससे ज्यादा तो अभी बाकी लोगों को जरूरत है. Thank you, Purvi ji, for giving this opportunity. Today we have with us our speaker, CA Ravi Gupta ji, with a 25 years experience in the field of charitable trust, society, Section 8 companies, taxation on private trust, audit, tax planning, relating to the trust and companies and individuals. He is also practicing on rare metals and partnership firms. He is a regular speaker at WRC and various government organizations like income tax, CAG, etc. on various topics relating to trust, NGOs, etc. And he currently the member of Charitable Trust AOP and other artificial person committee of WRC. He was member of Cooperative Society Committee of WRC in 2020-21 and Insolvency and Bankruptcy Code Committee of WRC in 22-23. With this short brief introduction, I welcome on behalf of JB Nagar Study Circle to CA Ravi Gupta. I request Pinky Madam and Chintan to give a small token of memento on behalf of JB Nagar Study Circle. On the floor is Sudarsa Ravi Gupta. बहुत ऊंचा हो जाएगा. ये चलेगा गिफ्ट है. इसकी जरूरत नहीं है.
तिकडे दिसत का नाही.
लेकिन दिख रहा है.
Recording चालू किया. Actually, ये move हो गया।
चेंज करो।
चालू कर दो। हेलो। सो गुड मॉर्निंग फ्रेंड्स। बढ़िया है। सो थोड़ा हिंदी इंग्लिश दोनों बात करेंगे, चलेगा सभी लोगों को? आई थिंक कनेक्टिविटी अच्छा होगा उससे। ओके, सो एट द वेरी आउटसेट आई वुड लाइक टू थैंक JB Nagar CP Study Circle of WRC of ICAI for giving me this opportunity, and more particularly to the conveners Urvi Bhageria ji, Deputy Convener Vijeta Jaiswal ji, coordinators Manish ji Dedia and Ankush Gupta. And at the very outset, I would also like to congratulate JB Nagar CP Study Circle for completing the illustrious 25 years silver jubilee, which they definitely need a very big round of applause. This is the first time that I have been given this opportunity to address this illustrious crowd of JB Nagar Study Circle. और जितने लोगों को भी पता चला कि JB Nagar Study Circle में मुझे मेरी बात करनी है, I have to express my opinion and views on the subject. So सभी ने मुझे यह कहा कि बोले सर अब आप पक्के स्पीकर हो गए। अभी तक पक्के नहीं थे, JB Nagar ने इनवाइट किया तो आप बिल्कुल पक्के हो गए, because it is one of the biggest study circle which we have in India. So, you know, with this, again, and I recognize the presence of RCM CA Pinky Kedia, who has been instrumental for arranging this particular lecture for me, seminar for me rather. And I recognize the presence of our past chairman, RCM Manish ji Kedia, and more particularly Mahesh ji Bhageria, who has been very helpful as far as I am concerned. And not the least, the staff of JB Nagar Study Circle, with a particular mention of Navnath, who has been coordinating the entire thing. I think कुछ issue है. Hello. Portable नहीं रहेगा, बार-बार करके इसलिए. Okay. Thank you. दिखाई दे रहा है ना सबको? Hello. Okay. So last time also we had a session on charitable trust, and the speaker was Mr. CA Vipin Batavia, who is a very senior practitioner in this field of practice. And in fact, whenever I have certain issues to discuss, I definitely turn upon to CA Vipin Kedia ji to clear my doubts. So, and last time he had, very recently we had received the circular dated 24th of May 2023 regarding the changes which have been announced by the CBDT, Central Board of Direct Taxes. But of course, the time for this particular subject allotted for a period of 2 hours, the subject is very big. So a period of 2 hours is very less. And one thing which I can see is here there are a lot of participants today who were not there in the earlier session, which was on last Sunday.
So I think I will make a brief mention of what Mr. Vipin Kedia had covered, Vipin Batavia had covered. And the rest is like what he could not cover because of the paucity of time. I will cover those things. Try to cover those things. So my syllabus today is, okay. I will cover section 215 very briefly, 1023C 3AB to 6A, 1046, 46A. I will touch upon section 11, section 12, section 12A, then section 12AB, section 13, 115 BBC, which was anonymous donation, then 56, 210, 271 AAE, section 80G. इतने सारे sections देख के घबराइएगा मत. I will cover all this, don't worry. 234G, 271K, then accreted income, 143.3, 164.2.3 read with section 167B, and ITR vis-a-vis ITR 7 vis-a-vis ITR 5. And then recent CBDT notifications and circulars. There have been a lot of CBDT circulars and notifications in the past 2-3 years. And I would not say it is difficult to keep track of all those circulars and notifications. But of course, we need to keep a track of all those notifications and circulars, because you may be having litigations in many of your clients, and those litigations may be running in, say, 4 or 5 years, in the past 4 or 5 years. So we need to understand all those circulars, notifications, so that we can provide better service and better consultations to our charitable trust clients. Coming to section 215, this is a very basic section, and what is charitable purpose is defined by this section. What does it cover? Relief of poor, education, yoga, medical relief, preservation of environment, preservation of monuments, and last but not the least, GPU, general public utility. There are certain important points which I have mentioned in each and every certain important case laws, certain important pointers, which will give you an insight on the particular section. I have covered elaborately in my PPT. The PPT will be circulated. I have already shared it with the JB Nagar Study Circle. Anyone who needs the PPT can always request the JB Nagar Study Circle to get this particular PPT, so that you can have a very detailed understanding of the subject, very detailed understanding. Section 215, there is a proviso to section 215. This proviso was added in the year 2008. And then over the period, the limits were changed. And finally, from the assessment year 16-17 onwards, the limit has been freezed to 20% of the total receipts. 20% of the total receipts. Of course, total receipts again is not defined by the Income Tax Act, but there are certain case laws by which we can draw a conclusion that what all can be included in the total receipts. To my understanding, if you have a commercial activity as well as a charitable activity, the income arising from both those things, section 11, section 12, income arising from both those sections, all has to be clubbed, and then the 20% limit has to be ascertained. There is also a debate between whether to include the corpus receipts or whether not to include the corpus receipts. According to me, the corpus receipts should also be included, but there are contradictory case laws on this subject also. One court is saying that corpus donation should not be included for calculation of total receipts, and the other judgment is saying that corpus receipts should be included in the total receipt. But anyways, that has to be decided. But practically, what I have seen in my practice for the last so many years, that we have to decide it on a case-to-case basis and within the four corners of law as far as practicable. And then if we don't find any solution, we can refer to certain case laws, or we can discuss within ourselves, so that we can, if anybody has gone through such a situation, they can guide you in it. And as far as I am concerned, my credentials and my contact details are always shared with the JB Nagar Study Circle. You can always get in touch with me, and I will definitely answer back to all your queries. Section 1023C. Now, earlier, everybody is aware that there were a lot of ambiguities as far as when you compare section 1023C with section 11. Lot of provisions were there in section 11, which were not covered in section 1023C. For example, section 11(2), whereby we talk about accumulation for a period of 5 years for a specific project. Or when we talk about many other things, like filing of return, 15% accumulation, those things were not specified in section 1023C. So over the period of last 3-4 years, a lot of changes have come. 1023C is brought in at par to a very great extent with section 11. Earlier, accreted income provisions were applicable only to section 11 entities. They were not applicable to 1023C. Later on, 1023C has also been brought into the ambit of accredited income. So those are the certain differences which I can cite, which were not, they were not analogous and they were not going sync hand by hand. So that was creating a lot of confusion. So they have been brought at par as far as the legislature is concerned. I would like to make a mention of a few very important amendments. For example, in 1023C 3AD, the earlier limit was 1 crore, whereby if an organization is having a total gross receipt of 1 crore, they are exempt from tax. And now that limit from the assessment year 22-23 has been enhanced to 5 crores. That is a very important and very welcome provision, because 1 crore in most of the organizations is a very small amount when we talk about educational institutes and medical institutes. So that is why we have to, always the figure has been rationalized from 1 crore to 5 crore, but with certain conditions. What are those conditions? One condition is that if you are running a medical institute as well as a hospital institute, in that case, the turnover or the gross receipts from both the organizations has to be clubbed, and then a figure of 5 crore has to be arrived. So whether after that arrival of that figure, we can come to a conclusion whether this organization is exempt or not. So that is a very landmark change. I think I'm not moving this. So there are certain judicial pronouncements which will also say that how that gross receipt figure has to be ascertained. First proviso, second proviso, that everybody is aware. I'm not going to repeat those things because it is a totally fresh procedure for registration. Provisional registration or regular registration. Provisional registration for a period of 3 years and regular registration for a period of 5 years. So as far as when we talk about 1023C, it is dealt by proviso number 1 and proviso number 2, whereby the timelines are given and the procedure to be followed by the income tax department is given. That how you will get the exemption and how you will get the registrations done. Of course, a lot of changes has come. I think a lot of you must be having a lot of queries about it. We will keep a time of around say 15-20 minutes for the queries also, so that I can address all those queries. We will need some more time. Zyada time lagega, 10 minutes, 15 minutes se zyada lagega. So I will complete the session accordingly. Some other landmark changes in 10th proviso when we talk about books of accounts. When we talk about books of accounts, earlier the books of accounts were not specified. Books of accounts are not specified. Now the books of accounts have been specified, where the books of accounts has to be kept, how they are to be kept, and if you have got books at multiple places, if you are having different branches, if you have got books at multiple places, that has to, a resolution to that effect has to be passed. And that resolution has to be intimated to the income tax department, to the jurisdictional AO to be precise, that these are the places where we are maintaining the books of accounts. in the last session, CA Vipin Batavia has said that because of one trust, because of one charitable organization or so-called NGO, where the raid was conducted, and this particular thing was found out that at there were various different branches and books of accounts were not kept properly. So that is the reason this amendment has been brought in. Of course, this is a bit, I would say, not in good spirit, because there are many charitable organizations who are genuinely doing good work. And just for a few charitable organizations who are not doing so-called genuine activities, the other charitable activities are, or other charitable trusts are penalized for this. Fifteenth proviso, to take cognizance of specified violations. Now, a new thing has been introduced whereby income tax has come up with a risk management strategy. That risk management strategy flags off certain cases which are to be investigated by the Commissioner of Income Tax or the Principal Commissioner of Income Tax, as the case may be. The income tax officer can also refer the cases to the PCIT or CIT, as the case may be. As well as the PCIT or CIT can himself take cognizance of such cases for identifying the genuineness of the activities of the trust. And if the activities are not found genuine, they may be classified into specified violations, which has again been defined by the recent amendments. Earlier, specified violations were not defined. Specified violations were scattered here and there. Now, specified violation has been brought under one particular amendment or a section or an explanation, whereby you can identify that these are the specified violations and the taxation has to be calculated accordingly. But 19th proviso also, no other provision of this section. Of course, this provision was there earlier, that you cannot claim deduction except under section 10(1), that is the agricultural income. 20th proviso, it says that you have to submit your return as per section 139(4)(c), read with section 139(1). Earlier, the dates were also defined, not defined as far as organizations registered under section 1023(c) are concerned. Now they have specifically defined the dates also. And now earlier, as far as form number 10, in the case of the organizations registered under section 11 were concerned, form number 10 was defined for only those organizations. Now 1023(c) organizations have also been brought into form number 10. They can also accumulate money for a period of 5 years for specific projects. One very harsh amendment which has been brought into regarding the amount spent for the benefit of specified person. What is specified person? Specified person is defined under section 13(3). There are penalty provisions brought in. For the first violations, the penalty to the extent of 100% can be levied. And for the second violation, penalty to the extent of 200% can be levied of the amount which has been spent on specified person. There may be a lot of instances happening whereby the amount is spent for the benefit of the specified person. But such huge penalties, I think government should rethink on it. 22nd proviso, they have brought one more very welcome amendment. What does that particular proviso say? Amendment in that particular proviso says that if there is a violation, as far as audit is concerned, books of accounts are concerned, violation of section 215 are concerned, for these violations earlier, point blank, all the expenses were disallowed. The charitable trust was put to tax at maximum marginal rate on the gross receipts. Lot of representations regarding this were made to the income tax department, and therefore they have come up with this amendment whereby expenses will be allowed in such cases, such violations. Of course, subject to again conditions that the amount should not be spent from corpus, no capital expenditure will be allowed. Those conditions are there. But of course, it is a welcome provision, because otherwise there were a lot of demands and all those demands were not collectible. I mean, let me take an example over here. And you have spent 90 lakhs on the objects of the trust. you are left with a surplus of 10 lakhs and the tax demand is 30 lakhs. So there were many debates and discussions on this issue that how do the department think that where should the charitable organization get the money from to pay such a huge demand. So that is why this amendment has been brought, and this is a very welcome amendment. 23rd proviso is very simple. Set off cannot be allowed. If you have spent more than your receipts in the earlier previous year, you cannot set off that particular deficit against the income of the current year. So that was not very clear. The judicial pronouncements were saying that set off is allowed, whereas the income tax department in the form itself, there was no such provision where set offs were allowed. So there were a lot of litigations. Now government has changed the law that no set off will be allowed. And in the same understanding, there is also a change as far as money spent from the corpus is concerned, or the money spent from loans and borrowings is concerned. Because generally the set off was because of only these two possibilities, whereby either you have borrowed the funds or you are using the funds from the corpus. These were the only two possibilities. Suppose you have 1 crore, you are spending 1 crore 15 lakhs. That 15 lakhs is either from loans or borrowings, or either it is from the corpus. So there also they have amended the law. Now they are saying that any money spent from corpus has to be compensated back to the corpus, has to be reimbursed back to the corpus. And in other words, the money spent from the corpus is definitely from the money spent from the amounts invested or deposited as per the modes specified under section 11(5). So ideally, you have to compensate. When you talk about compensating the corpus, definitely it is depositing back money into the mode specified under section 11(5). And in the same sense, when we talk about loans and borrowings is used for spending towards the objects of the trust, and to the extent the loan is repaid, it can be treated as application of income towards the objects of the trust in the year in which the loan is repaid, and to the extent it is repaid. This was first amendment. Then they came up with one more amendment. What was that amendment? Timeline. In the earlier amendment, timeline was not defined. Now they have amended. They are saying that within 5 years, you have to compensate the corpus or you have to repay the loans and borrowings. Now, of course, one thing is very clear that when we talk about corpus, 5 years ka time limit is good enough. But when we talk about loans and borrowings, suppose if the loan is taken for a longer period, say for example 10 years, 15 years, then it will again create a litigation. How can the loan be repaid within a period of 5 years when the loan is borrowed for a period of say 10 years or 15 years? So there has to be a change in this particular thing also. Again, a lot of changes. Then how will you define these changes? Loans and borrowings taken from private parties, loans and borrowings taken from financial institutions. So, to catch hold of one thing, ek ke baad ek changes aate jayenge. So that is again creating a lot of confusion as far as charitable trust provisions are concerned. Now, for a better understanding of the reapplication, re-registration, provisional to regular, and new charitable trust wanting to register under section 1023C or getting approval under section 1023C, and then converting that provisional to regular, I have given a chart over here for a better understanding. It will give you a bird's eye view. What are the timelines, when you will get the orders, under what form you will get the order, and what will be the validity of that order. So I'm not going into much details as far as this is concerned. Of course, we can take specific questions on this. When everybody is aware by this 24th of May amendment or the circular, not amendment, they have increased the timeline to 30th September 2023. Now, in that particular increase of timeline or the condonation of delay also, it is still not very clear on many aspects. That has to be cleared again by the income tax department, because we have already started work as far as based on the circular dated 24th of May. But we are facing a lot of challenges in that also. So that has to be clarified time and again by the income tax department. But one thing, last amendment, I want to make a special mention out here that from 1st of October, organizations already doing activities, already registered with the income tax department can now directly go for regular registration for a period of 5 years. Whereas earlier the provisions were such that you had to take a provisional registration first, and then by obeying the timelines mentioned over there, you can convert yourself from provisional to regular registration, which is for a period of 5 years. But now they have said that for organizations which are already into existence for the last couple of years or couple of months, who have already begun their activities, to be precise, those organizations can straight away go for a 5-year registration. Pardon me? My vision. Huh. Yes. Of course. There is a different form for it. I mentioned the form number 10AB. You have got the provisional registration under section 10A. When you are supposed to convert that provisional to regular registration, the timelines for those things are what? We have to understand the timelines. The timelines are either within 6 months from the end of the month in which the activities have commenced, or 6 months prior to the expiry of the provisional registration, whichever is earlier. Now let us take a practical example. You got your provisional registration in the month of, say, April 2021. When the provisions first came in, you got your provisional registration in the month of, say, April 2021. The activities of the trust commenced in, say, April itself or, say, May itself. So you had to go for a provisional to regular before November 21. Suppose if you don't start your activities till, say, 2.5 years from you procuring the provisional registration. In that case, you have to again apply for a provisional registration or regular registration. Suppose you started your activities, say, after 2 years, you got the provisional registration. In that case, after 2 years, within 6 months from there, you had to apply for a regular registration. So there was a lapse by many of the trusts. And if you remember, there was a circular also, which said that till 29th of September 2022, jinka bhi delay hua hai, they can file up to 30th September 2022. But उसमें भी काफी लोगों का रह गया. इसके लिए they have again increased that timeline from 30th September 22 to 30th September 23. Trusts which are existing March 21, okay? No, but from 21-22 onwards, the new provisions have kicked in, where the trust was already there and they were already enjoying the benefit of 12A or 80G, as the case may be. They had to straight away go for a re-registration for a period of 5 years under clause 1. Straight away for a period of 5 years. That was a cakewalk. You just make an application, you will get the registration for the next 5 years. Registration certificate is not received. When did you apply and for what purpose did you apply? Okay, the provisions kicked in from 1/4/2021.
Yes.
You already had registration under section 12A.
Earlier we had.
You did not avail the re-registration process up till 31st March 2022. Then you missed the bus in 25th November 2022 also.
Was applied for that.
In that case, in that case, the department must have rejected your application. Otherwise, pardon? They must have communicated, because if it is online, and earlier, suppose in your practical example, suppose if you applied on 30th of March 2021, the application was pending as on 1st of April 2021, right? So what the department did, there is a specific proviso for that, that applications pending on 1/4/2021 shall be considered as applications pending as under the provisional regime. You must have definitely got the provisional registration certificate for a period of 3 years. And then as soon as you commence your activity, within 6 months from there, you had to convert your provisional registration to regular registration. And if the application was made in the earlier regime and you did not receive the certificate of registration, in that case, they must have rejected your application. No, I'm afraid you can't be in a position to apply that again, because these provisions are there for early. You mean to say you had the registration under Section 12A earlier? Earlier you had. So now you can do it. Because you missed the bus on 1st April 2021. You missed the bus till 25th November 2022, the later condonation. And now this is the third condonation which we are getting. That is till 30th of September 2023. In your case, if you had registration under Section 12A, which was for perpetuity, you can now re-register, you can file it for a period of 5 years till 30th September 2023. But of course, you will get the registration from 1st April 2021. 1st April 2021, 5 years from there. That is how it is. Provided you had the 12A registration earlier, in the earlier, you can do it. No, but sir, there are two different questions in this. No, but there are two different questions in this. One thing is, you already had a registration under Section 12A. If you had a registration under Section 12A, there was no need to apply before 1st of April 2021. Because these are two different situations. If you had 12A, you had to apply for re-registration from 1/4/2021. It was assumed that you are registered till 31st of March 2021. And if you did not have a 12A registration, in that case, if you have made an application before 1st of April 2021, that was by default considered as an application of a new trust, and they were allotted provisional registrations for a period of 3 years to be later converted into regular registration. Yes, provided you commence your activity. And why was this brought? The reason was very simple, because when in the earlier regime we used to practice and we used to go to the department saying कि sir 12A चाहिए, 12A चाहिए, तो the first question was आपने activities क्या किया है? And our contention was आप 12A दोगे तो activity करेंगे. So that was the ambiguity. So that is the reason the department came up with this provisional registration concept. Yes, sir. See, earlier CIT लोगों ने क्या बोला कि हमारे पास 5 साल का रजिस्ट्रेशन के लिए एप्लीकेशन आया है, हमने कुछ देखा नहीं. We will not give regular registration for 5 years. We will issue a provisional registration for a period of 5 years, which was law misinterpreted by them. Later on, they have come up with a circular that जो भी provisional registration आपको issue हुए हैं under clause 1, that has to be considered as a regular registration for a period of 5 years from 21-22 to 25-26, 27 rather. 2, 3, 4, 5, 6, 2026.
So what will that have to check in?
No. You have already got an order which reads provisional.
Yes.
Which reads provisional. You have, whenever you are sharing those documents with any organization, wherever you want to share it, you should share the circular along with that. Think about this is the circular which says that ये provisional गलती से issue हुआ है. This is actually a regular registration for a period of time. Confirm. No worries. Absolutely. There is separate certificate for ATG. No, you have for both the things, it is the same form, sir. For 12A also, it is form number 10A. For ATG also, it is form number 10A. you have to select the regular respective codes. That whether you are making an application under section 12A, whether you are making an application under section 80G, or whether you are making an application under section 1023C, or whether you are making an application under section 35. Yes. Until and unless, yes, until and unless the trust is not registered under section 80G or approved under section 80G, irrespective whether it is a provisional or a regular one, the donor will definitely not get the 80G benefit. No, 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 sir. Section 10 is totally different, sir. You get an order. You get a separate order for that. No. 12A you get a separate order, 80G you get a separate. Both the orders are separate. Yes, sir. And not only the donor has to take that from the trust who is receiving donations, they have to file form number 10BD, all the details, and in response 10B is generated. That 10, by virtue of that 10BE form, the donor will get the deduction. Even if he does not receive the 80G certificate from the trust, then too, if he receives the 10BE form, he is eligible for the deduction. The trust has to file form number 10BD, and in this the form number 10B which you receive in response, you will get all the details of the donors, whereby PAN number, name of the donor, amount donated, everything, address of the
Trust will get it. I have
Trust.
get it from the trust.
yes, yes,
Like 26 years, there is
Right.
no like it should be able to see.
right.
By total, there is-
I think till now, in our experience, we have seen that donations are still not being reflected in 26 years. But later on, they have this functionality in their mind that 10B form should be reflected in the 26 years.
Yes, so
Respect to 26.
both the- both the-
Yes, yes, yes. आगे चले? So these are the changes, the combined thing which we have discussed from 1st October 2023. Any trust which is already there, the activities are commenced, can straight away go for a registration of 5 years. Corpus borrowings, this we have already discussed. Inter-charity donations, another contentious issue. In the last session also we had a discussion on this. This time also, I mean, this is a very important issue that any donation except corpus donation from one charitable trust to another charitable trust, only 85% will be allowed as application towards the objects of the trust. Now the entire play has to be done in the computation. Of course, your income and expenditure will show 1 crore aaya, 1 crore diya. The surplus will be nil. But when you make your computation, you have to add back that 15 lakhs, which is disallowed as per the inter-charity donation provisions. This is one. Carried forward under Form 10, no, can't be done. Can't be done. Then about the due dates, there is a change in the due dates. You have to file form number 9A and form number 10 by August. You have to get the accounts audited by September, and then you have to file the returns by October. So there was a lot of issue as far as this particular filing dates were concerned. Representations were made to the income tax department. I was a part of an outreach program held at Thane Income Tax, whereby I got the opportunity to share the dice with the Principal Chief Commissioner of Income Tax, Madam Renuka Johri, who had come from Delhi. And that time she had told me that all these contentions or all these issues are well taken, and very shortly, and that was on the 23rd of May. And she had committed that very shortly you will get the circular regarding all these relaxations. And on the 24th of May, I believe, 22nd we had met, and 24th of May this circular kicked in, whereby relaxations were given. Over there, as far as the dates for filing form number 9A and 10 is concerned, we had contended that how do you expect us to file form number 9A and form number 10 before finalizing the accounts, or before finalizing the computation, rather, to be precise, and before getting the accounts audited. Once the accounts are audited or once the accounts are finalized, only then we can come to a conclusion that what is the amount that we are supposed to utilize in the next financial year or for the next 5 years as per section 11. So in this circular of 24th May, this has been taken care of. And what they have said is even if form number 9A and form number 10 is filed before the due date for filing the return, they will be allowed the exemption. One more very drastic change which has come is earlier Kalidas sir had also covered regarding the accrued expenditure. Over there also accrued expenditure is allowed as far as Companies Act or as far as CSR is concerned. But as far as charitable trusts, the expenditures will now be allowed only on payment basis. Only on payment basis. And the reason being that there are many organizations, we have also seen many trusts whereby the provisions are carried on for years together, 2 years, 4 years, 5 years. And that is the reason this amendment has been brought into. New Noble Education Society, lot has been discussed about this. I will not spend much of time on this, on these judgments. But the only thing which I nowadays recommend to my clients is कि बनती कोशिश 1023C में ना जाए. बनती कोशिश get the deduction under section 11 by getting registered under section 12. Because the reason being, the punchline being, when we talk about 1023C, the character of income as well as the application of income, both are verified. And when we talk about section 12A companies, which avail deduction under section 11, only the character of application of funds is checked. The character of income is not checked. Whereas in 1023C, your character of income, आप कितना markup ले रहे हो, कितनी कमाई कर रहे हो, everything will be very verified. So until and unless yours is not a strictly educational organization, yours is not a strictly medical organization, you should not opt for 1023C. You should straight away go for 12A registration and avail the deductions available under section 11 and 12. So this is the takeaway as far as these two judgments are concerned. 1046 Ahmedabad Urban Development Authority judgment, the Supreme Court taxed Ahmedabad Urban Development Authority. So the government came up with 1046A. So 1046A से Supreme Court के judgment को nullify कर दिया. अब 1046A में you will be in a position to avail the deductions as far as the organization is meant for public facility purposes. 1046, 1040, 11.1, nothing much to discuss. 85% has to be applied towards the objects of the trust. Corpus donation exempt because it is capital in nature. But as far as computation is concerned, we have to first add the corpus donation in your computation and then claim a deduction under section 11(1)(d). One very important thing, funds of a charitable trust can be applied towards the objects being carried out outside India. But in my practical experience, when we have seen that when we go to the charity commissioner and we tell them that the objects of the trust are to spend money towards public good in and outside India, so they object to it. They object to it saying that outside India ke liye hum allow nahi karenge. But the point is, you have to explain to them is section 11. In many of the situations, the Maharashtra Public Trust Act, as far as it is a local act. That is why I am referring to Maharashtra Public Trust Act. And income tax is concerned, they are not in consonance. For example, various clauses like dissolution clause, beneficiary clause, the income tax department is insisting on those clauses when you go for 12A registration, whereas the charity commissioner is not very keen on those clauses. So when the charitable organization or the constitutional document is made by advocates, they purely go by Maharashtra Public Trust Act. They don't include those clauses. And when we go for 12A registration, we face a challenge. So it is always better that all those clauses are included, because now till the time we are being allotted provisional registrations and re-registrations, it is fine. But once when we are scrutinized by the income tax department for the next 5 years or converting provisional to regular, it will be a challenge. So it is better we include all those clauses. And outside India, yes, you should make a provision in your trust deed. You should explain to them that this is allowed, provided those projects are approved by the government. and they are mentioned in the official gazette. So various important points as far as 11.1 is concerned, we have mentioned. One, in most of the seminars which I have been attending as far as charitable trust is concerned, I mean, there is least bit of talk about 60 to 63. Let us cover that. Section 60 to 63. What is section 60 to 63? When we talk about 60 to 63, this means income belonging to a charitable organization will be included in the total income of the transferor if such income is subject to section 60 to 63 of the Act. What is 60? Transfer of income without transfer of asset. Suppose if a author of the trust is transferring the asset, is not transferring the asset and only transferring the income to the charitable trust, it will be taxable in the hands of the transfer. That is what it exactly means. Then revocable transfer. Many a times the author of the trust is making a revocable transfer in favor of the trust. So that is also not allowed. If you are making a revocable transfer, the income will be clubbed with the transfer. And then transfers deemed to be revocable. 5 साल के बाद revoke होगा. One thing is totally irrevocable, and one is like 5 साल के बाद revoke हो जाएगा. So that is also not allowed. In that case also, the income will be clubbed to the income of the transfer. And then definition of the terms transfer and revocable in section 63. Explanation 11.1 A and B. Filing of form number 9A. Two situations. One situation, you have accrued an income, you have recorded the income in the books of accounts, but you have not received it. And the second situation is you have received the income, but that income is received for a project to be carried on the subsequent year. This is the second situation. In both the cases, you can file form number 9A and carry over the income to the next year. In the particular year in which the income has been received, it will be allowed as a deemed income. Pardon me? By mic down. Now. It can be carried forward. It can be carried. Any income which is there on your income side, and suppose if you feel that this income will be utilized in the subsequent financial year. It will be received in the subsequent financial year. Because you are talking about the accrued interest part. Now it has to be done on a year-to-year basis in that case. You have to make your entire income and expenditure account, and then you may come to a conclusion that suppose more than 85% you want to accumulate this amount, and it will be used in the next year, or it will be used in the next 5 years. If the amount will be used in the next 5 years, you have to file form number 10 under section 11.2. Not 9A. Provided for 9A, suppose if you are in a position to use that amount in the subsequent year itself, you can file form number 9. You have to judge the situation first. Yeah. No. Right. Okay. Right. It is not specific that it cannot be given, but generally we should follow a practice whereby the amount should not be given. Because this may lead to litigation. Because generally, when you talk about form number 9A, 9A is asking you a purpose also. Understood. In that case, what we can do is, when you talk about the total income, say in the subsequent year, you have received the income in the previous year, and then we are talking about the subsequent year. In the subsequent year, you get your income for that particular year, plus the income which is carried over by virtue of filing form number 9A. Both the things have to be added, and then again 85% application has to be seen. In that case, that particular 85% application may include donations to other people also. Provided you are spending the money towards the objects of the trust. And just in case, if you are spending money, if you are donating, inter-charity donations are being given, then in that case, 15% disallowance will kick in now. So that is entire part of calculation. It can be allowed. And then this TDS, वगैरह जो भी है, TDS, as far as TDS is concerned, if you are not deducting TDS, 30% will be disallowed. Any payment beyond 10,000 will be disallowed. ATG2B, this is another very recent amendment. This amendment, I believe, is brought in because of, big temples being built in India now, Ram Mandir, for example. This is a retrospective amendment from the financial year 21-22, whereby the trust can use the money, or whereby, to be very precise, the trust can decide to transfer any amount towards the corpus of the trust. Otherwise, this particular facility was not given to trust earlier. To be further precise, that earlier, if you received donations, and if you want to transfer certain amount from that particular receipt to a corpus donation, it was not allowed. But this is an exception. Because in this particular case, the charitable trust will receive donations from various places. And many a times, that amount will be utilized over the period of next 2-3 years, 5 years. This work will go on for another, say, 2-3-5 years till the infrastructure is built and all those things are built. So that is why this provision has been brought in. But now the question is whether it is for all the renovations of places of worship, or it is only for notified places. So when we talk about Mandir, Gurudwara, church, or notified places, according to me, on the plain reading of the section, we can always say that it can be utilized for all the renovations at the moment. But I think that should not be the intent of the law. They should come up with something on this, some clarity on this. Whether each and every renovation will be allowed this particular facility or not. Voluntary contributions. That is another subject of debate, because anonymous donation, there are various case laws which are saying that when you receive anonymous donations or in donation boxes, as far as places of worships are concerned, the anonymous donation ka provision is not utilized so strictly. But one more thing, if it is totally a religious organization, and yes, not said about it. But voluntary donations, voluntary contributions will include anonymous donation. Will include anonymous. But now that it has to be seen, further clarity has to come on this. Yeah. Person, I think in UPI, can it really not be traced? Okay. In my understanding, yes, it is an anonymous donation, because when we talk about donations, the identity of the person has to be there. And when we don't have the identity of the person, it is an anonymous donation. Yes. Yes. Yeah. See, that is why I'm saying that there has to be a clarity on this, because anonymous, if you are receiving donations from UPI and you don't know the identity of the person, or the person has not said ki, I am the person who has transferred so and so amount, issue me a receipt for the same. In that case, the organization will not have the details, and when we don't have the details, corpus ka, there is one more condition, that when you are taking a corpus, when you are treating a particular donation as a corpus, the directions has to flow from the donor. Over here, the directions are also not there, that this money should form part of the corpus. So it is a very debatable subject now. It has to be seen on a case-to-case basis. But definitely it is an anonymous donation. The amount so transferred to corpus has to be used for certain purposes, which is mentioned out here. If we don't follow that purpose, the consequences are mentioned out here. I'm not going into much details as far as this thing is concerned. Two very important case laws which I want to highlight. The case laws are very prominent, but they have been totally overturned by the amendments now. Those case laws are ITO versus Vokaligara Sangh 2015 and Jain Mandir, and held that corpus donation cannot be taxed even if the trust is not registered under Section 12A of the Act, confirmed by Pune Tribunal in the case of ITO versus Serum Institute of India Research Foundation. Now, in such circumstances, generally when we discuss with amongst ourselves, because the case law is specifically saying that if you are not registered under Section 12A, even if you are not registered under Section 12A, corpus donations cannot be taxed. Corpus donation is a capital receipt, irrespective whether you are registered under Section 12A or not. But the point is, when we discuss about small trusts, the only conclusion which we come to is that jhanjat palne ka 12A le lo. Because otherwise this will lead to a lot of litigation. Small trusts will not, they cannot, fight their case up to tribunal and High Court and Supreme Court. So it is always better that we obtain 12A so that we can get the benefit of corpus donation. Otherwise, the judicial pronouncements are very clear. They are very clear that it is a capital receipt. Even if you do not have 12A, it will be treated as a capital receipt and it will not be put to tax. The second thing, the Supreme Court in the case of CIT versus Thansi Trust held that then when there was no doubt about the authenticity of the application, then it would not be disallowed even if physical funds had not been parted with. This is a Supreme Court judgment. Now, there is a change in the legislation that the expenditure will be strictly allowed when the payment is being made. So, just wanted to bring to your notice. Scope of income includes capital income, and scope of application includes application of capital nature also. Even if 100% of income is donated to another valid trust, the entire donation shall be treated as application for charitable purpose. Now again, there is a change. Now only 85% will be treated as donation towards the objects of the trust. One more very important change which has been brought is compliance under any other law for the time being in force. Now, materiality of those non-compliances have to be seen. If the non-compliances are not material, the deduction will be allowed. But now again, it is a debatable issue. When we face the income tax department, we may say that this non-compliance is not material, but the income tax department will say, no, this compliance is material. So there also we need more clarity, because for a charitable trust, if it is running a business organization, there are many laws which are applicable to it. For example, on a lower side, if you go to see profession tax, ESIC, then if you are in Maharashtra, you talk about Maharashtra Public Trust Act, Security, the Society Registration Act 1860, various laws, local body taxes or local body compliances, for example, Gumasta and all those things. But of course, those are not material, definitely. But it has to be examined on a case-to-case basis. The non-compliances have to be seen on a case-to-case basis. For example, if your trust wants to borrow money, the Maharashtra Public Trust Act says under Section 36A3, you have to go to the Charity Commissioner and take the permission from borrowing money. If you don't do it, whether it is a material compliance or whether it is a not material compliance, it has to be seen on a case-to-case basis. So this will create a lot of challenges in the coming future. Capital gain, as far as capital gain is concerned, I, in my entire practice, take a very practical approach. If you are selling an asset, even if you are investing under the mode specified under Section 11(5), it is compliant. If you are not purchasing any other asset, if you are investing the money in the mode specified under Section 11(5), it is fine. So let us not go into the formulas now. And one more thing, Section 50C is not applicable to charitable trusts because charitable trusts are governed by Section 11, 12, 13. Consequences of non-application. 9A में आपने non-compliance किया, so it will be put to tax. The same things are repeated what we have covered in 1023C regarding loans and borrowings, 5 years, corpus ka utilization, everything we have discussed 11.2. 11.2, of course, 11.2 is there in both 1023C as well as 11 organization. 9A is not applicable to 1023C organizations. 9A form का facility 1023C में नहीं. 11.2 में you can modify the objects. Suppose if you are not in a position to spend the money or the object has become unachievable practically. In that case, you can approach the income tax department. You can request for a change in the objects within the objects of the clause, objects which have been mentioned in the constitutional document. 4 and 4A talks about business undertakings. Of course, 215 may we saw 7 limbs. 7th limb is general public utility. The earlier 6 limbs. The proviso to 215 is not applicable to the earlier 6 limbs. So they can have, the trust can have asset in the form of business also. And those businesses are covered by section 11.4 and 11.4A. 11.5 modes in which you can invest the money have been specified. The other things are fine. Immovable property you can invest. One thing which came to my notice of late is investment by way of acquiring equity shares of a depository as defined in clause E of subsection 1 of section 2 of Depositories Act 1996. Now, I am putting forth the question to the House that what is the meaning of this investment? Can anybody? Pardon me? PDSL. Yes. Your thoughts are corroborating with my thoughts. Can a particular trust, I'll put a straight question, can a particular trust invest in the shares of CDSL, which is the only depository which is listed? According to me, yes. A trust can invest in sovereign gold bonds also, stock certificate as defined by Sovereign Gold Bonds 2015. Subsection 6 talks about depreciation, that when you have claimed the value of acquisition cost of the entire asset in your income and expenditure account, you have debited that amount to the income and expenditure account. In that case, you will not be allowed depreciation. Earlier, the situation was such that you were allowed to debit the entire acquisition cost as well as take depreciation also. So that double deduction has been removed. 11.7. Now, earlier in 11.7, let me take a practical example. Suppose if you have a school, and the earlier regime, the limit was 1 crore. You had a turnover of 90 lakhs, or you had a gross receipt of 90 lakhs. You did not have 12A, or your 12A was rejected for say some reason. In that case, you are allowed to go to 1023C 3AD and claim deduction over there. But now that has been taken care of. You can either claim deduction under section 12A or you can claim deduction under section 1023C. Again, those timelines. Again, corpus, loan borrowings. Section 12A talks about voluntary contributions. 12A is the conditions for applicability of section 11 and 12. Not going into much detail as far as those things are concerned. Now, the only recent amendment is the omission of provisions related to rollback exemption. Suppose if your 12A is cancelled, rejected, in that case, you will not be in a position to go to the rollback provisions which were brought in by the Finance Act 2014. In other words, the accredited income ka provisions will kick in. 12AB, again, the application process, provisional registration, regular registration, the timelines. Again, a chart over here for 12AB also. 12AB, there are only 2 more possibilities whereby you are changing, there is a change in the objects of the trust. And when by default from 1023C, you are from 1023C, you are going for a registration under section 12. These are the 2 additional possibilities as far as 12A registration is concerned. Section 13, nothing much to talk about. Section 13(1) says that the exemption will be withdrawn on such and such conditions. The most prominent being 13(1)(c), whereby the amount is spent towards specified persons. They have defined specified persons. They have defined the type of violations which if a trust does, they will not be in a position to get the advantages under section 11 and 12. Exemption shall not be denied of the investment of the trust or institution in a concern in which the specified person has a specialized substantial interest, provided such investment is not more than 5% of the capital of that particular concern. Of course, reasonable remuneration is allowed. Many a times you will come across lot of queries that if it is an educational institute, if the trustees are providing services of educating to the organization, will that expense be allowed? Of course, it will be allowed, provided that it is reasonable. You have doctors running a medical hospital under trust. In that case also, the remuneration given to them, provided it is reasonable, is allowed. Suppose if a promoter gives its property to the charitable trust on lease, that expense will also be allowed, provided the lease is reasonable when compared to the market conditions. There are various case laws which I have cited over here on this particular subject. Nothing contained in section 11 and 12 shall apply in the case of anonymous donation. I have covered anonymous donation separately under section 115 BBC. I hope anonymous donation ka limits everybody is aware. 1 lakh or 5% of the total receipt, whichever is higher. Uske upar jitna bhi paisa aayega, that will be taxed at maximum with an exemption to religious organizations. 13(8). 215. When you violate the proviso of section 215, for that particular year, when you are exceeding the limit of 20%, only in that particular year, you will not be allowed the deduction under section 11 and 12. Otherwise, suppose if in the next year, your commercial receipt is 19% of the total receipt, or less than 20% for that matter, in that case, you will be allowed the exemption under section 12A. Otherwise, for that particular year, if you are exceeding the limit of 20%, you will not be allowed the deduction under section 11. That is what section 13(8) talks about. Now, there is one more thing which I want to bring to your notice. The time limits have been changed. Filing of form number 9A, filing of form number 10 has been given the date of 31st August. But when we talk about form number 10, there is no corresponding change in the act as far as section 13(9) is concerned. 13(9) still says that before filing the income tax return, you can file form number 10. Similarly, the corresponding rule is also not changed. Only the provisos and only the subsections as far as section 11 and section 1023C are concerned are changed. So this has also been brought to the notice of the CBDT, saying that there is no corresponding change in the relevant sections. 13(9) and rules also. There are no changes in rules. Yes, we can do that. We can. But 10 in the earlier regime, you could file form number 9A till 31st of March. That is the end of the assessment year, which is now like 31st December. Earlier it was 31st of March. Now it is 31st of December. Here again, you are talking about October. Now, as far as 9A is concerned, I believe that you should be allowed filing of form number 9A till 31st of December again. Because you have another 3 months for the conclusion of the assessment year. But ठीक है. There is 10 also. Now, what is subsection 10? Subsection 10, where the provision of subsection 8 are applicable or the trust institution violates, again, to violation of 215, violation of audit provisions, violation of timelines to file the returns. In that case, expenditures will be allowed. Subsection 11, for the purpose of computing income chargeable to tax, set off will not be allowed. That is already covered again. 115 BBC, we have discussed. 115 BBI, taxation of specified income at special rates. 30%, special rate is 30%. Violations have been defined. Specified income or specified violations have been defined. 56(2)(10). Earlier, there was a provision whereby if a trust makes a gift or gives a gift to the promoters, it was an income applied towards the objects of the trust. But of course, we did not use this provision earlier. And by the time we could use it, they have changed it. Section 271 AAE of the Income Tax Act 1961. Penalty for application, this I have already covered. When you spend money towards the for the benefit of specified person, 100% penalty for the first violation, 200% penalty for the subsequent violation. ATG, nothing much to be covered. Applications, the new registration regime has been kicked in, and the same timelines applicable as we have discussed for 1023C and ATG. 12A. To 234G, 271K, two types of penalties and late fees. 234G talks about late fee, 200 rupees per day. 271K talks about penalty when there is a delay in filing form number 10BD and filing form number and procuring file form number 10B, which has to be given to the donor. Now, the timelines prescribed for this particular thing was 31st of May 2023. Now they have revised to 30th of June 2023. Now, my question is, when you are extending the timeline for procuring registration under Section 12A and approval under Section 80G till 30th of September, don't you think this time limit also should be extended till 30th of September? Or for that matter, even 1 month ahead, it should be extended till 31st of October. Because suppose if a person applies in the month of August for his registration, which has already missed 5-year wala registration. Let us take a practical example. Trust already registered in the earlier regime for perpetuity. Now, suppose they apply for that 5-year registration in the month of August. They get their both 12A and 80G for the next 5 years or the subsequent 2 years. In that case, if they have received donations under Section 80G, and if they file their 10BD in the month of say August or September, they will end up paying a huge penalty and they will end up paying a late fee again. So the department should again come up with a clarification for such cases. At least till 30th of September, they should not levy any late fee or they should not levy any penalty. We have already written on this also to the CBD. 115 TD TATF, accredited income. Accredited income again, fair market value, gross asset minus liability, you will be put to tax at maximum 30% subject to certain conditions. (115T) talks about rate of interest, 1%, which has to be levied. SSCN default has been defined by 115TF. 143.3, we have already discussed that the representations can be made by the income tax department. The PCIT can take suo motu action, or the third thing is risk management strategy. 164.23 read with section 167B. A lot of you must have got cases whereby 12A, the trust does not have a 12A registration. And when you file the return, gross income, because you don't have, and if the return is filed mistakenly in form number ITR 7 instead of ITR 5, in that case, the gross receipt is put to tax at maximum marginal rate. There is a bit of an ambiguity as far as the income tax department is processing these returns. Of late, we have received certain intimations whereby the income tax department is levying tax as per the rates applicable to the individuals. Sometimes they are levying at maximum marginal rate. Sometimes they are levying tax at the rates applicable to the individuals. So that is why, in my humble opinion, when we refer 164.2, 164.3 and 167B, I am of the strong opinion that because of 167B, which has given a specific exclusion to charitable trusts, maximum marginal rate should not be levied, and accepting the common accounting principle, expenses should be allowed in all practical circumstances. I have been instrumental to getting the intimations rectified under section 154 in many cases. By taking, contending about 164(2)(3), read with section 167B and the judicial pronouncements. Now, one thing is very clear: if you have 12A, if you have 1023C, you should file ITR 7. If you don't have these registrations or approvals, you should go for ITR 5, whereby your organization will be treated as an AOB. Notification number 34, dated 30th May. Very recently, we have received this notification. We should discuss this particular notification in detail. What does this notification say? For cases falling in clause number 4, that is ATG 5, proviso 1, clause number 4 to ATG 5. In those cases, if you are making an application for ATG approval, you will get the approval from the beginning of the financial year. Why this notification has been brought in? How many of you have received ATG ka order किसी ने देखा है recently? भले provisional या regular जो भी, whatever. Yes. What does the order read, sir? From the date of the order? The earlier provision was from the date of the order. Right? Date of order. Now this notification is a very welcome notification, because now it says that from the beginning of the financial year, you will get the ATG. Earlier, because this was creating a lot of challenges. Now suppose if a client has approached to you on April 1, say, हमको सर 12 लेना है, ATG लेना है. From 1st October, from provisional to combining provisions have been brought in. Now, if we go for the combining provisions, 1st October say you apply for 12A, then you go for ATG. There is a timeline prescribed of 6 months by the income tax department to process the applications. So by the time the applications are processed, April will kick in, which is the subsequent financial year. So ATG will be allotted to you from the date of the order, whereby you have made, suppose, what is the result of this? You make an application in financial year 23-24 and you get an order from 24-25. And that too for 3 years. If it is a provisional thing, and if it is a regular thing, it will be for 5 years. So effectively, you will be given an order only for 4 years. So this was an anomaly which has been taken care of by this particular notification, which very recently, 30th of May. So from now on, applications under ATG will be issued from for the entire financial year in which the application is being made. Audit form 10B and 10BB. 10B is a huge form with all the details. I mean, once you fill form number 10B for any of your clients, none of the provisions you can miss. सारे provisions आपको बाहर हो जाएंगे. 10B एक बार भर लिया. So that is how it is. I think in the next couple of minutes, we should cover this. The main thing is, when is 10B applicable? 10B is applicable for organizations which have got turnover of more than 5 crores. Organizations having turnover of more than 5 crores, or they have received foreign contributions, or they have spent money towards the objects outside India. These are the 3 conditions for applicability of form number 10B. Earlier, 10B was different. 10B earlier was 2,50,000 plus you have got receipts, you should file 10B. 10BB was applicable for 1023C organizations. Now, both the things have been merged. Section 11 organization and section 1023C, both have been merged into one form. The forms are split. Form number 10B is for organizations having turnover of more than 5 crores, And 10BB is for organization having turnover of more than 2,50,000 or receipts of more than 2,50,000. 10BB is a shorter form as compared to form number 10B. So let us travel through this form 10B. From this year, it's this assessment year. Yes, sir. Financial year 22-23. Yes. Now, you can connect this to 1023C 3AD organizations also. 1023C 3AD, the limit is extended up to 5 crores. So obviously 1023C 3AD is also kept out of this because the turnover is up to 5 crores and this is above 5 crores. Form number 10B. In the revised form 10B and form number 10BB, chartered accountants need to give a qualified report wherever not satisfied. That is stating the reasons for qualifications. Because there are two sections. One section is you have to certify true and fair. And one section is you have to certify true and correct. You have to certify as true and correct the annexures which are there in the form. So wherever a chartered accountant is not satisfied, he has to qualify the report with the reasons. Otherwise, it is needless to say आजकल CA लोगों के साथ क्या-क्या हो रहा है. Right, sir. Right. That is the sole purpose. Consequences are there. I mean, what I have seen when earlier we used to fill form number 10B, they used to ask about amount spent towards amounts given to specified persons or related party transactions. If you mention those transactions, the department has got no functionality to check whether it is reasonable or unreasonable. The only functionality which they have is issue a notice for scrutiny. That is there. But let's see, by this form, the new form number 10B, things should change. But I don't think things will change because when specified persons ka year, we have a very elaborate mention in this particular forms, 10B and 10BB also. So this challenge is going to be there, sir, in future also. When we talk about specified persons, because otherwise they would not have brought so many penalty provisions. 100% on first violation, 200% on subsequent violation. Very draconian. The annexure to form number 10B covers the following. These are the details which they are asking. Name, details of the auditee, legal details. In this particular paper, what we have done is in this page and what information is to be mentioned in this particular page. We have mentioned in the subsequent side window. Basic details of auditee, legal details. Legal details means whether it is a trust, society, whatever. Registration details, management details. In the next page, we have objects of the auditee. What objects the trust is into. For what objects it has been formed. If objects modified, application for registration in prescribed form and manner made within 30 days. This has also to be mentioned in form number 10B, whether there is a change in the objects of the trust. If there is a change in the objects of the trust within the prescribed time limits, that is within 30 days, whether you have applied for re-registration or not. If not applied for re-registration, the provisions of section 115 TD, TF will kick in. Commencement of activity details. Again, why commencement of activities? To see the violation, whether if any, from converting a provisional registration to a regular registration. Because the timelines have been prescribed in the Act. Details of books of accounts. You have to mention the details of the books of accounts according to the codes provided in the form. The codes have been provided in the notes below. The notes have been affixed over here itself for a better understanding. For each and every type of book, a code is prescribed and that code has to be selected from the drop-down arrow. And these are the books that we have mentioned or examined. These are the books which the trust is maintaining and we have examined the same. Now, specific mention of advancement of general public utility details, percentage of receipts from commercial activities. Specifically, we have to mention. Earlier, there was no such need in any of the submissions. In the ITRs also, in the earlier forms also, there was no need to mention such percentages. But now, this percentage has to be mentioned out here. It has to be calculated that this is the total receipt and this is the amount that we are spending towards the general public utility. Or in other words, general public utility is a primary criteria. Then we have to bifurcate that this is the total receipt, and out of this total receipt, this is the percentage arising to the trust, or this is the percentage of amount accrued or received by the trust, which is from commercial activities. So that this particular submission can be checked with the compliance of 13.8 or the proviso to section 215. So this is again a big task. Then details of business undertaking, if any, under section 11.4 of the Act, yes. Business incidental to objects, if any, under section 11.4A or 7th proviso to section 1023C to this Act. This is also to be mentioned. TDS details. TDS on receipts, TDS on receipts, then voluntary contribution details. Again, voluntary contribution में form 10BD donation details. Now, a very big exercise as far as donations are concerned. 10BD में आपने जो मेंशन किया है वो अलग से बताना है, आपने जो नहीं मेंशन किया है वो अलग से बताना है, और जो नहीं मेंशन किया है उसके अंदर क्या क्या है वो अलग से बताना है. जैसे क्या हो रहा है सर, 10BD में ऐसा है कि 10BD में सपोज इफ यू हैव रिसीव्ड अ डोनेशन ऑफ से 1 crore, राइट, एंड आउट ऑफ दैट ओनली 50 lakhs के डोनेशन ऐसे हैं जिनको आपको ATG का एडवांटेज देना है. दे हैव गिवन यू द रिक्वायर्ड डिटेल्स. तो हमने 10BD में 50 लाख भर दिया. द रिमेनिंग 50 lakhs, उस रिमेनिंग 50 lakhs का आपको डिटेल देना है, whether it is anonymous donation, various sections are there, sir. Whether it is बारीक में लिखा distribution received by fund trust institution which is approved under clause B of subsection 2 of section 80G, यानी कि जो amount received by temple gurudwara church under section 80G 2B, that has to be mentioned separately. क्योंकि जैसे भाई साहब ने सवाल पूछा था कि भाई various donations ऐसे आएंगे जिनका हमारे पास डिटेल नहीं है, and I have transferred that amount to the corpus, so वहां पर वो अमाउंट का मेंशन आएगा कि भाई these are the amounts which I have received. I do not have the details. We have not issued any 10BD for this. तो बहुत बड़ा टास्क है. It is a big task. Voluntary contribution details from form number 10BD, donation details, anonymous donation details. Earlier there was an apprehension कि सर मेरे ट्रस्ट को 1 crore आया है, मैंने फॉर्म भरा 10 लाख का. Will they treat the remaining 90 lakhs as anonymous donation? So that was ultimately clarify हो गया. डिपार्टमेंट ने कोई क्लैरिफिकेशन आज तक नहीं इशू किया है, बट व्हाट वी हैव सबमिटेड एंड व्हाट वी हैव गॉट इन रिटर्न, उससे हमने अंदाजा लगाया कि भाई जिनको ATG का डिडक्शन चाहिए उनकी डिटेल हम 10BD में भरें. अदरवाइज यू नो देयर आर वेरियस टेम्पल्स, छोटे छोटे डोनेशन आते हैं, 100 rupees, 1100 rupees, 2100 रुपया, 5100 रुपया. आई मीन दे डोंट इवन गिव द डिटेल्स. आप 100 रुपया डोनेशन देने वाले को बोलोगे मेरे को तेरा पैन नंबर दे, वो भग जाएगा, 100 रुपया देगा नहीं. Yes, ideally they should not have. No, there are various reasons to it also, sir. There are other activities to be seen, what activities they are carrying on, and the percentage has to be seen, that what percentage they are spending towards the religious objects. Of course, that is again a big issue to debate about. Then, yes. Object-wise application, electronic, other than electronic application. Application of income, object-wise application, electronic, other than electronic application. Again, आपने application कैसे किया है? Electronic, other than electronic, more than 50 lakhs, whom you have paid, all those details have to be given. Pardon me? Of course, purpose is a voluntary contribution includes corpus as well as non-corpus. Section 115 BBI, specified income details. Income under section 12(2), यहाँ से specified income, amount spent towards specified persons. This is the place where we have to mention all the details. Capital asset transferred under section 1A, 11(1)(a), that is. Application of income out of different sources accumulated under. Now this is again a big mention out here. Suppose if you have accumulated income under by filing form number 9A, how much money you have used from that particular accumulation? If you have accumulated income by filing form number 10, how much money you have utilized from that particular accumulation? How much money you have utilized from the 15% accumulation? 15% accumulate hota hai, that is accumulated under a different head. How much money you have utilized from that amount? Specific mention har cheez ka, each and every. As far as corpus donations are concerned, corpus donations have to be invested in the mode specified under section 11(5). If you have not complied with that, suppose if you have a corpus of 1 crore and you have invested only 90 lakhs in the mode specified under section 11(5), in that case, that 10 lakhs will be put to tax at maximum marginal rate. Earlier, such disclosures were not asked for. From the last year, we have been doing this. Opening balance of corpus received during the year, applied during the year, and ultimately this is we arrive at a figure which has to be invested in the mode specified under section 11. No, where was that amount during the financial year? Bank. In the bank balance, the bank was scheduled bank. It is allowed. It is allowed. Third. Yes. See, when we are making a comparative statement of corpus donations being invested under mode specified being invested in mode specified under section 11(5). There itself we say, this is 1 crore. 1 crore mein se 20 lakhs is fixed deposit, 20 lakhs is saving bank account balance, 20 lakhs is current account balance, whatever. So that's it. 1310, 22nd proviso to section 1023C details not maintained books of account, not filed RO. Everything has to be reported by the auditor. He has not maintained books of accounts, not filed return of income, violated provision to section 215. Here in this specified violation ka thing, they have not included one thing according to me. What they have not included is ki suppose if you give some wrong declaration filing the forms, 12A for example, when you are going for an application for registration under section 12A and the information given is incorrect, that is also one of the specified violations. They have not covered this over here. Expenditure incurred for religious purposes. Specific mention of expenditure incurred for religious purposes. Earlier, this was never required to be mentioned. Persons referred to in section 13(3). 13(3) में कौन fall करेगा? That is defined. Specified persons again. Really, up to extent of 5%. Expenses are allowed, sir. Expenses are allowed. Lekin ATG will become a challenge. If the expenses are more than 5%, ATG will become a challenge. Religious पे आप 100% खर्च कर सकते हैं. But the point is ATG का दिक्कत. If you have ATG and if you are spending more than 5%, ATG will be cancelled. Specified violations defined each and every change. See, schedules to form number 10B, these are the schedules which are to be given. Details of corpus, details of foreign contribution, details of loan borrowing, details of income applied outside India, each and everything. इसके लिए मैंने कहा कि once you go through all this ना, एक बार ये form पढ़ लेंगे तो पूरा charity समझ में आ जाएगा. And these are so many schedules. So many schedules. Anything, any loan taken about 2 lakhs in cash, amounts paid more than 2 lakhs in cash, received more than 2 lakhs in cash, सब कुछ, everything. 10 BB is a relatively smaller form. जो उसमें जितनी detail है उसका nearly like this is for smaller trusts. The only thing out here which I can see is books of accounts are not defined. The only thing is we have to mention books, maintain books of accounts. There is a bit of an ambiguity also. When we talk about 2,50,000, 2,50,000 may the provision says that you need not mention maintain books of accounts. But in 10 BB, you are asked specifically whether you are maintaining books of accounts. Notification number 94 is about books of accounts. Not going into detail, already covered. Form number 10, I have given. What is form number 10? What all details are required in this? Now, CBDT circulars, which have been issued time and again, regarding condonation of delay in form number 9A, regarding condonation of delay in form number 10, regarding condonation of delay in filing form number 139.1, and regarding condonation of delay in filing form number 10B. These are the 4 condonation ka circulars which have come time and again for different financial years. So everything is mentioned in detail in this. Anybody interested to go in detail, you can always take the PPT. It is a very elaborate PPT. Pardon me? Right. About 2,50,000. And this is a nutshell, of the circulars. So this is what is my today's syllabus. The house is open for question and answers. Yes, sir. Sorry.
So that can be taken as application of fund.
According to me, yes, it can be taken because it is related to the, of course, the other parameters have to be seen, but of course, it can be taken as a, of course, GST is not my subject today, but according to my
Point of view.
yes, right, it can be treated as an application towards the objects because ultimately, if it is not utilized now, it will be utilized in the subsequent year.
And it is utilized
At the best, what we can do is we can add back that particular amount to the computation and arrive at a figure, taxable figure. And then when we are utilizing that amount in the subsequent year, we can reduce that amount. That is better, I believe. It is a more practical approach. Yes, sir. 11.2 mein talks about the accumulation for 5 years. Right.
But this also we have to find some.
No. It is a statutory deduction. It is a statutory deduction. The best what we can do is we can have a separate head for such accumulation, which are statutory accumulation under section 11. Yes, sir. Inter charity donations, yes. Yes.
So there should be some amendment where help people in this manner. It's getting hindrance.
Definitely, I can. I fully agree with you because I am doing that. I am doing this in my own charitable trust also. whereby I have got certain funds, and those funds, if somebody needs an medical help, I say that कि भाई वो जिसकी तकलीफ है उसको नहीं, मैं hospital को दूंगा या मैं school को दूंगा. So that again becomes a challenge. It is a challenge. We are doing that. We are surely doing that.
Because one trust gives for the trust.
That's what I'm saying. Ki there are, I mean,
These are genuine things that are happening.
see, there are various, there are various provisions whereby we strongly feel that department is like, burning the house to kill the rats. I mean, that summarizes everything. So I do agree, because this is going to create a lot of challenge, and still now there is no clarity. What about that 2,50,000 rupees? अगर 2,50,000 की भी हमको छूट मिलेगी या नहीं मिलेगी? According to me, yes, we should get, because it is a statutory provision. We should get it. But all said and done, it is a big challenge. Inter-charity, because, and why this provision has been brought in, we have to understand. Again, the same thing, because there are certain organizations, 1, 2, 3, 4, 5 trusts, from one trust to another, from the other trust to the other, from there again to the fourth trust. Ultimately, there is no application, there is only accumulation. So that practical solutions are inter-charity donation. When you have disallowed purpose donations, I think that was enough. I think that was enough. Yes, sir. Assessment year 23-24. No, sorry. Let me correct. 24-25. 24-25. Last year में तो हमने भी किया इंटरचेक.
So what safeguards should be taken?
It will not be taxed. Don't worry. It will not be taxed.
We have the name, we have the address for the person.
So it will not be taxed. Don't worry. It will not be taxed. Because just in case if your trust is scrutinized, in that case you can prove your credentials. That is not. Anonymous donation itself is unidentified. How you will identify anonymous donations? Because, see, I can only tell you that there have been various case laws. The finance minister in the concerned year has also clarified in the parliament statement that this particular provision is brought only to check round tripping of funds. काले से सफेद करना, सफेद से काला करना is only for that. छोटे मोटे ट्रस्ट जिनके पास anonymous donation आ रहे, दान पेटी में पैसे आ रहे, they will not tax those entities. There have been various case laws. You need not worry about it. Yes. Yeah.
Questions.
Right.
When a trustee transfers money from his personal account to trust account for a couple of days, and for the great amount investment is used to the amount temporarily borrowed from trust. Without so my question is whether such kind of temporary borrowing from state for 36 one for NPTA.
See, Maharashtra Public Trust Act has specified that you have to take permission for borrowing money.
Correct.
But practically for smaller periods, say 1 year, 1 month, 2 months, generally they don't have a functionality to check any violations.
Right.
But of course, if you abide by the law, you have to take permission even for a single borrowing.
Even from trustee also.
Yes, definitely. Definitely. And as far as your modus operandi, which you are talking about,
Correct.
that has to be acid tested with all the provisions which I have just discussed.
Yeah.
And then come to a conclusion that this is the taxable income or not, or this is a violation or not. It is not only about taxability nowadays, it is about violations. When we talk about specified violations is a big thing nowadays. It is not only about taxability. The trust may pay the tax, but the specified violations has got large repercussions.
But per se, the trust can borrow money from trust.
Yes, yes.
There is no-
Income, see, there is no restriction in the income tax department, but now in the light of the amendment whereby income tax department says that if you have not complied under any other law for the time being in force, they will cancel your 12-year registration. They will treat it as a specified violation.
But-
So, subject to materiality of the transaction.
Can the corpus money?
No, it cannot be used.
So there is a clear violation.
It is.
Ordering without permission.
Yes, it is.
Yes, borrowing, I mean, that permission people they say, user is borrowing from banks.
Any borrowing.
Right, and sorry, one small last.
Yes, yes.
Ten trust is bought. But. Yeah, there's property violation is, but the invoice is in the name of. With the designation trustee of so and so. And the RC book is also in the name of individual name. And trustee of so and so. Now,
Indirectly, it is tantamounting to loan to the trustee.
yeah, it is one part, but this added to this configuration is there. 1%. And that is also in the
Obviously,
invoice in the name.
he is the buyer.
Now, one part is.
Charge करना पड़ेगा.
So, ये तो but whether is the auditors one, you can just highlight the precautions which we can.
No, I mean, highlight the precautions are very simple, that they are not complying with the MPDA also.
Right.
They are not complying with the income tax act.
Right.
Those are the, I mean, you have to mention accordingly. Yes, you have to qualify the report.
Yeah,
It is.
yes, but it also violation.
It is because आप trust के पैसे से गाड़ी खरीद रहे हो, and it is being used by the trustee without paying any higher charges. So I think I am done today. Thank you for the patient listening. I hope I have made sense. Yeah. Okay. So I hand over the reins to Purvi now. Thank you so much.
Thank you, Raviji, for this very elaborate session and also for your elaborate presentation. On seeing the total number of amendments and the changes in the audit form, I don't know, somehow I was reminded of the CA final syllabus, which seemed to be never ending. It is very similar to that. To propose a formal vote of thanks to our today's faculty, I would like to call CA Chintan Shaji, who is a past convener.
Thank you, convener, for this opportunity. I take this opportunity to thank Raviji. Starting with just say, there's a saying in Marathi, Murti Lahan, Kirti Mahan. He proved himself. A stage was arranged for him, but he did not need that. He has elevated himself without the stage. So he has given immense knowledge to us. Thank you, sir, for sparing your valuable time. And we request everybody to carry on with the louder. Thank you.